Hey, Bubba Trades! I wanted to do a video analysis update of the stock market, but really, I just want to stick to some, I hate to say the word fun, right? But just kind of, the more growthy names, the sexier names. I try to, go around the bunch, but it's a lot of growth in this video. And that doesn't mean I just only trade growth. That doesn't mean I only trade growth. But I actually got some questions recently. Do I even trade at all? So I wanted to answer some of these questions. Most of these questions are actually really good questions. Justice Watch 4602. By the way, I was very happy with, the engagement the last video got. I'm glad you guys like, those kinds of videos and stuff like that. Gives me more to work with. But he asked a few questions. This video that I made was about QQQY and JEPY, which are brand new zero DTE put selling ETFs. They sell puts every day on the S&P 500 and the NASDAQ. I just made a video about it. And they're very risky. Everything about that video, from the very first moment of the slide to the entire description to throughout the slide, was about making sure I made it very clear that this was very risky. This guy didn't seem to think so. He said, I don't think he understands the risk. Very first thing he said. But let's just read some of this. You can literally pyramid safer dividend yields and sell out of the money calls on quality stocks almost daily. I agree with that. Do you really even trade? Which I thought was an interesting question, given what he's about to say in the next paragraph. You're gambling on these new things, IMO, right? In my opinion, you're gambling. You don't really actually trade. Heard it all before. I don't think, and this guy responds, he gives his 2 cents. I don't think he understands the risk. Literally every single thing about that video was about how they were, pretty risky. I think that there's this weird phenomenon we have on FinTwit where if someone says, they're investing in something, or they're buying something, or they're shorting something, or they're buying, that means that they're putting their entire portfolio in it. And in everyone's mind, this is always done at the exact top, at the exact bottom where they shouldn't have done it. And, there's no dollar cost averaging. There's no, it's just this very blanket. I put 100% of my portfolio into QQQY, and JEPY is what these folks got out of this video. He said ordinary income tax. I did actually want to talk about taxes. I'm in a pretty tax favorable state. Ordinary income tax coding is a problem. He's absolutely right about that. That will never change because of the nature of the ETFs unless a tax law changes. So that, yes, that is true in the United States of America. If you make money, if you make income, which these people might not know about, you have to pay income tax. Yeah, you got to pay income tax. And then this guy, he has some better questions down here. Well, I've seen what he claims to trade, right? Again, he doesn't think I actually trade, right? Many are huge winners. That was nice of him. I didn't expect to read that compliment. Pro traders will take small amounts of, I didn't see that. Did he really? Is that a compliment? Anyway, pro traders will take small amounts of risk that are for pyramiding into winning trades. Absolutely, I agree with that. This looks like a typo. Only while have the regular trades. Okay, so he says some will end up growing in huge multiples, upwards of 30x the original R, but I never noticed him mentioning that. Yeah. So this guy, I mean, I don't expect that every single person who comes to my channel is gonna just go read all 7,000 tweets, watch the many hours of videos that I do. Okay, I don't. So really, the whole reason I wanted, and I just want to finish what he said. He hasn't heard me mention that I take smaller position sizes in less risky things, and I take larger positions in safer things. So that is something I do. I guess I didn't mention that in my last video, but the safer that I think something is, which generally stocks beta and ETFs beta, preferably the more back-tested history through the more markets that it's been through, the safer it is, the larger position, I will take just to stabilize the portfolio. So, a lot of people, they haven't heard, some of, the things that are pretty important to my channel. I want to go over them. Many traders retire because of hitting big winners and those huge multiples. But trading should not keep being a 9-to-5 job unless one chooses to for the love of trading. He may just also love trading IMO. So this was kind of where I thought it was weird, because in this comment, he's asking me if I really even trade. Kind of like that retail mentality. Are you even a pro trader, bro? Do you wake up every day and just stare at the screens and, try to micro trade that's not what you want to do for the rest of your life? Just stare at screens for 9 hours a day and, not even know if you're going to make money? You don't want to build a more quantitative passing system? Anyway, do you even trade, bro? Right? That's the question up here. And then down here, he's like, hey, I don't think trading should be like a 9-to-5 job. So I'm like, which is it? Are you making fun of me for not trading? Are you, or do you like the fact that I'm trying to build something, more passive, so I don't have to stare at screens all day for the rest of my life? I wanted to, address some of the concerns about risk. And I also wanted to just, remind myself, not everyone can read every single post that I have. They can't watch every single minute of every single video. I wouldn't wish that on my worst enemy. Anyway, I use Metaverse. Let's back up. I use various risk management systems, but there is something I do in particular that I've told my followers and my subscribers a lot about that gets me unlimited downside exposure and upside exposure to the stock market, more specifically the Metaverse ETF, which has, in my opinion, very overlapping holdings with the NASDAQ, big tech, and also, growthier, sexier holdings, that we'd see in a ETF, maybe like ARK. I'm not saying there's a perfect overlap there, but the whole idea is that the NASDAQ and ARK, in this current environment we have a lot of ways to collect premium from them. So what I actually talked about in that last video was how I'm really interested in doing about 63% JEPQ and pairing it with 37% QQQY. So that way I'm always going to own, the stocks in the NASDAQ through JEPQ. I'm going to collect 1 month at the money option premium, and I'm also going to collect 0 DTE put premium from QQQY. I think the yield could be over 30%, and I'm getting the same upside exposure as QYLG, right? So my goal is to kind of, be able to take a very large position in that, or various things like that, and collect all that huge premium, but also be able to sleep at night. So that's kind of, just to oversimplify what I'm looking for. I'm trying to build a net credit. There's a lot that goes into this, but what I'm using right now are calls and puts on the Metaverse ETF. And so this is what I posted on August 2nd. So, it's interesting. Before, we get into this, let's look at what's happened since August 2nd. I think everyone knows what's happened since August 2nd. Pretty big dip. We're starting to hear that was the counter trend rally. That was, the suckers rally. Bang. Now we're going to go on A, B, C, right? We're already hearing that. That was a dead cat bounce. 2 or 3 months of red candles go by. That's what happens, right? That's, historically what happens quite a lot in that kind of third quarter September quad witching period, which is exactly what I was talking about. Not having long gamma positions before the September and March quad witching is something I'll never do as an active trader. MMs use volatility during this time to rotate into the next year's alpha while retail stops out. So I really want to make a detailed video just specifically into the Greeks. That is a lot more slides than this. And I'm actually working on that right now. And you'll see that I'm working on that with the next slide that I show. But I want to get really in depth into this. But the problem is what's going on with these numbers down here, right? This seems like it's very important. I'm talking about how I had unlimited downside exposure to the market before a big correction that I could buy against those in the money puts. A lot of stocks without really having to worry about risk. And then we got that big correction. And now I have all these deep in the money puts to buy all these risky, high premium yielding growth things against. the highest quality stocks in the market, the NASDAQ, JEPQ, SPYI, SVOL, all my favorite funds. And I got all these deep in the money puts on a really risky growth ETF to buy them against, right? Seems like a pretty big deal, 1,800 views, 2 likes. And that's about what every single one of my posts ever about these positions has had. So I feel bad for this guy, down here, and I've gotten these questions before. Can you do a session on this? I'm trying, but I think you and that other guy are the only ones who care. But what I do to get unlimited downside and upside exposure to the market, besides being very diversified, I post about commodities, real estate, a lot of the typical, what he referred to as the safe dividend payers, a lot of the safe dividend paying sectors I post about pretty often. I invest in pretty often. They get low views pretty often, okay? Low reactions pretty often. So that's why I'm not surprised people don't, know I do this. Anyway, Metaverse ETF options I own. There are 4 types of long gamma positions. The straddle, which is an at-the-money call and an at-the-money put, same strike price. The strangle, which is an out-of-the-money call and an out-of-the-money put, same expiration. They're all the same expiration. And a married put, which is buying shares based on a delta equivalency of the put. So if the put's delta is negative 37, a married put position is buying 37 shares of that stock. Okay, that's called a long gamma position too. So there's a 4th one that's less popular that is called a long guts position. That is basically a straddle, but instead of both of the strike prices being the same and both at the money, they're both about 50 cents in the money. So the ideal straddle setup would be the ideal long guts position would look something like this. The ETF is trading at 9.50, so the $9 call is bought for the in-the-money call, and the $10 put is bought for the in-the-money put. So I'm going to make a video going into the Greeks. All right, I really want to just Greek out in a video, okay? I really do, and I'm working on it. For now, this is just what I have, and it's not even all I have, but it's probably the most important downside Armageddon holding I have, okay? So this is what I posted to my followers on Twitter the very first trading day of August, 2nd day of August, before we had that correction. So a lot of these puts actually did become deep in the money. So I rolled them, but I wanted to show how I pay for all this data, because the big, question is, well, options aren't free, they decay, and there's other risks associated with options too, like exercise and assignment, but options aren't free, right? They decay. So I'm doing all this to collect a lot of premium as I can. Just to put it in short, my belief is that the 10 put and the 9 call on the Metaverse ETF buying leaps gets me a lot of exposure to growth for a very little amount of money, okay? And that is actually going to decay very slowly relative to the options that I can now sell through ETFs, like options that are sold through JEPQ that expire on the NASDAQ in 1 month, like options that are sold through QQQY that expire on the NASDAQ in 1 day. They're going to decay way faster than these options. So this is called a net credit. And now I actually did get to my goal where I have substantially more money coming in, so that every 2 or 3 months, if I wanted to, I could just take, a quarter of a dividend, half a dividend, and buy more hedges if I wanted to. Now my dividend income has exploded, and it's going to continue to explode. And a lot of the reason it was able to do that was because I own positions like this, where I could kind of scale into riskier holdings like ARK and OARK. I bought a lot of QYLG and SPHQ against these, late in 2022, early in 2023, and I was able to take a pretty large position in that before those ETFs rallied. Anyway, this was before I rolled the position. I want to show my rolled position now, then we'll get into the charts, okay? So You can see what I own up here for the November expiration. Now I want to talk about these options that expire super close. So they got short-term expirations. That means they're going to decay super rapidly, right? Well, when the Metaverse ETF fell, it's at 9.45 right now. I should probably write that. The Metaverse ETF is about at 9.45 right now. When the Metaverse ETF fell, these puts right here became deep in the money. So I bought a lot of JetQ against them. I bought a lot of various things. You know, the yield max blends that I like, where I blend a fund like Tesla or, you know, NVIDIA with NVIDIA. You know, I blend Tesla with Tesla. I bought a lot of one thing that I'm doing right now that I really like. I'm blending Amazon with AMZ. I'm blending AMD with AMDY. And this is all just tech. Okay, this is all just a tech video. Okay, you know, please don't be like this guy and assume because I didn't talk about, you know, Analyze Capital Management that I'm all in. You know, this. I just want to focus on tech and growth. For these very close short-term options, they're deep in the money. The 12 put is very deep in the money. This 11 put was pretty deep in the money, and I bought a lot of funds against them. So if the market recovers, I'm gonna get more oomph to the upside, and that's the benefit of the long gamma position. When I take a position like this and the market does fall, I can buy against that position, and the puts are so in the money, deep in the money, that they suffer from very little decay. Okay, once an options delta hits negative 100 or 100, it becomes stock equivalent. So a negative 100 delta put is the exact same thing as being short 100 shares, according to exposure. A 100 delta call is the exact same thing as being long 100 shares, and the Greeks, generally speaking, are not going to affect those options unless the delta goes back from 100 or negative 100. So when an option is so deep in the money that the delta is negative 100, theta decay doesn't really matter. It doesn't really matter unless that in the moneyness changes, okay? So for now, I'm not really worried about this 12 put or this 11 put decaying because the intrinsic value of them is basically what I bought the pairs for. If the market really recovers, then I'm going to need to have seen that the funds and stocks I bought recover with the Metaverse ETF. Really, the only thing that goes wrong is that the Metaverse ETF explodes to the upside while SPY and QQQ crash. Okay, I'll get into the correlation analysis for that later. So that's just to kind of talk about the, you know, the short dated options that expire November 17th. Okay, I want to talk mostly about these three options right here that I rolled to the February expiration. So I have the 12 put in the 11 call, the 11 put in the 10 call, and the 10 put in the 9 call. Notice they're all stacked, right? So if the market in the Metaverse ETF completely bottoms and starts to recover, the 9 call is going to get more powerful, the 10 call, the 11 call, and so that's kind of how I'm kind of prepared for, you know, these puts to not be in the money, right? The bigger thing, though, is that I'm collecting tons of premium during this time. I have tons of exposure, so I can collect a lot of premium from an ETF like SPYI, SVOL, JEPQ, even JEPE. You know, there's a lot more options in the bond market now, especially with these buy right ETFs, TLTW, so that in the future, I could be so diversified, I don't even need to do this. Right now, I'm getting a lot of premium from tech. So I'm trying to scale into tech, and I want to do it safely. That's why I have this unlimited downside exposure. What are these 12? Now let's get into the real reason I own these, the downside exposure. What's this 12 put in the 11 call position? Why on earth would I own a position like this? What am I thinking, okay? So how much does this 12 put in 11 call guts position for 216.24 really cost? How much did it really cost? Well, it cost me $257, but notice there's a $1 window. This is the benefit of the long guts position compared to the straddle, is that there's $1 of moneyness. And also, since the puts in the money and the calls in the money, this is going to have more upside and downside exposure than a straddle where both options are at the money. It's going to have a lot more exposure than a strangle where both options are out of the money. So since the options are in the money, their deltas are higher. Okay, their deltas are higher, and they have, since there's a dollar difference, that window is intrinsic value. So between the 12 put and the 11 call, there's $100 of intrinsic value. That means I really only paid $157 for this. Now, let's see how much exposure I got for this. So this is a concept called delta dollars. Basically taking the delta of the option and multiplying it by the current price of the underlying gives the notional exposure. It gives the dollar amount exposure if someone had just owned commons or had just shorted commons. So I have an example of that, and we're just going to calculate the downside exposure. I paid $157 for this, and we're not even going to focus on the call. The 11 call, all that upside exposure on that 11 leap call is purely a bonus for this point. All right, we're just going to focus on this 12 put right here. How much downside exposure did I get for $157? Well, I calculated like this. The beta of the Metaverse ETF is 1.38. That is 0.27 higher than QQQ's beta. It's 0.38 higher than SPY's beta. So since it's more closely related to the NASDAQ, I'm going to compare it with, and since I'm buying the NASDAQ against these in the money puts, JEPQ, QQQY, I'm also buying SPY too. The idea is that SPY is going to be safer, but the NASDAQ is going to be more correlated. Like I said, a lot that goes into it. The 12 put, how much downside exposure do I have? Well, if I take this 12 put, it has a delta of negative 0.87, and the Metaverse ETF was at 9.44 when that happened. So what I do is I take 87 and I multiply it by 9.44. That gives me a delta dollars downside exposure of 821. That means that I have the equivalent dollar amount exposure. I stand to gain just as much to the downside as someone who has entered an $821 short position on this ETF. Now, since I'm using this ETF to buy primarily, in this example, JEPQ and QQQY, an ETF like SVOL even, I'm going to use the NASDAQ's beta, and I'm going to adjust the downside exposure to the NASDAQ's beta versus the Metaverse ETF's beta. So since the Metaverse ETF's beta is 0.27 higher, I'm going to take that number, that delta dollars exposure that I have to the Metaverse ETF, and I'm going to adjust it to the beta of the NASDAQ. So since it's 0.27 higher, I'm taking 821 and I'm multiplying it by 1.27. That gives me $1,000 in this example in downside exposure to the NASDAQ. That means that I can buy an awful lot of money, an awful lot of the NASDAQ against these puts. And here's the thing. As the Metaverse ETF goes lower and lower, all these deltas for the puts are just going to get stronger and stronger. And it's actually going to get to the point where no matter how hard I tried, I actually wouldn't be able to offset the downside exposure if the market crashed and the bears were right. Remember, the bears think that I'm a doofus. They think that this is an A, B, C correction. So they're taking the length of wave A and they're saying this high is never going to break. This high is never going to break. I'm retail bag holding Billy and we're going down to 327. Here's the problem. I already prepared for that. Oopsie. You got a lot of pretend quants on FinSwit, right? You got a lot of pretend quants on FinSwit, and you're really worried that I'm the one not trading. I'm actually trading. All right? I prepared for this. 1,877 people saw it. 2 people liked it. It was there. I got proof. Okay? So I was actually prepared for the bear argument before it even happened. They're saying, hey, this high is never going to go, and this quad wishing dog days of summer correction we always have is actually the top, and it's never going to be broken again. This is ABC. We're crashing. And I'm like, I don't care. Why on earth would I care if we crash? If we crash, I will make more money just with this ETF. I do the same thing with PSQ. I do the same thing with SH that are inverse funds on PSQ and SH. So there's extra stuff going on there. But I do this with AG&C, very popular, probably one of the largest mortgage, real estate lenders. The real estate sector I'm pretty interested in. But I don't care if the stock market crashes. Did you not read this? I said on August 2nd, I'm already hedged for the stock market to crash. What, you think I'm an idiot? We're going to go into the September VIX spike, and everyone's going to be calling for the market to crash. I'm already ready. You know what I mean? And so, yeah, the stock market crashed. All these puts became deep in the money. I rolled them to February. But you want to know if I'm the one who's really trading. So why don't you go ask Lizzie? Why don't you go ask Tiger Trades? Why don't you go ask fake wife trader, Manti Te'o trader, right? Fake wife trader. Why don't you go ask them if they're really even trading? Because I'm ready for what they're saying is going to happen. I'm ready for what Lizzie thinks is going to happen. I'm ready for what Marty thinks is going to happen. I'm ready for what Tiger from Winnie the Pooh thinks is going to happen. Why don't you go under their pages and ask, do they even trade? Do they even mention call delta exposure when the market explodes? Nah, they still got pinned to their bio that they were short NVIDIA at the top. They never shorted NVIDIA before that very top moment. You don't ask them if they even trade. Isn't that interesting? You think they're ready for this? They're not even ready to be right. I don't give a damn if I'm wrong. I was prepared to be wrong the second day of August, before this correction even started. Who cares? You know what I mean? That's called being a real investor, a real quant. All right? These little kids, they're playing a quant on TV. All right? They're make-believe. All right? I'm posting about my real life. Your guru is make-believe. I think the S&P 500 formed a large wave one, subdivided into 1, 2, 3, 4, 5 waves. I like that this high made a highest high on the RSI, and we've seen so this high within this cycle, 1, 2, 3, 4, 5 waves up. Wave 3 makes the highest high on the RSI. We have a shallow wave 4 and a wave 5 higher. I bring that up because a lot of financials, we see this even kind of more clearly on this RSI, where we have this wave 5 higher and it ends with pretty clear momentum divergence. I would say the chart I posted about today, Brookfield, which I just posted about, very good example, just for, real quick, what I'm talking about when I talk about 5 waves up, ending with momentum divergence is 1, 2, wave 3. Notice that this is the highest within wave 3, the highest reading on the RSI is made. I use the weekly RSI preferably. There's a shallow wave 4 correction, and when a wave 5 higher high is made, it's done so with momentum divergence on the RSI. So that's why I bring that up with SPY, because it's a lot cleaner on, in my opinion, a lot of financials, a lot of, it was pretty clean on a lot of industrials. It's pretty clean on a lot of, the real estate sector, kind of, the boring side of SPY. I want to stick to the fun side of SPY in this video. From this high, and then we had an ABC correction that ended the 50% retracement. And then from this low, we formed another wave 1 and another wave 2. Sorry, there was no another wave 1. This is a wave 1 and a wave 2. I believe this is another wave 1 and another wave 2. On the NASDAQ, it's pretty, I don't want to say obvious, but it's pretty clean that this is a wave 3 of wave 3. I say that because we can look at the QQQs in a second. But if I look at the QQQ chart, this wave 3 goes way past the 161.8% extension of the length of wave 1. It's a pretty clean 1, 2, 1, 2, and then wave 3 looks like it's obviously the biggest wave. Okay, can't tell my broker. Wave 3 is obviously the biggest wave, but I think this is 1, 2, 1, 2. This is wave 3 of wave 3. And what we actually just ended is wave 4 of wave 3. So I'm looking for a wave 5 of wave 3 to begin. This might be a little messy, but this is how I got these fibs on this daily chart. So I took the length of wave A, I placed it at the wave B high, and that's how I got this fib zone. So what some wave theorists will say is if SPY goes below 410.91, that's going to support the idea that the bears are going to say, which is that this is not A, B, C. It's a wave 1 and a wave 2. They're going to have a little more confirmation of that if we see SPY go down to below 410.91, past the 161.8% extension. And by that point, I'd have to imagine these puts would be super deep in the money. So far, everything that I wanted for this, these hedges have worked out. SPY fell. The Metaverse ETF fell a lot more. I got a lot deep in the money, puts to buy, very high yielding, JEPQ, SPYI, SVOL, and even blending a small amount of that with QQQY and JEPY, I didn't put my whole portfolio in it. Anyway, 410.91, great level for SPY. And I'm looking for wave 4 to end before wave 5. Now, here's the real thing I have on my mind. If the S&P does turn around and it starts going higher, all my eyes are going to be on this weekly RSI. Because if we get past 70.70, there's a rule that wave 5 ends with momentum divergence. So if we get past 70.70 on the weekly RSI, then that means we had a higher high in price and we had a higher high on the weekly RSI. So that could suggest that this kind of, dramatic, 3 swings pullback might be another wave 1 and another wave 2. That would be too bullish to stay right now. And honestly, it's not even a necessary argument. A wave 5, if it's the length of wave 1, place at the wave 4 low. Wave 5, we'd make a marginal new high. I think the wave 5 is actually going to be the length of wave 3, place at the wave 4 low. We could see SPY take a launch up to an all-time high above 410.91. We go below 410.91. That's going to be kind of the first notch that the bears got, that this is wave 1, wave 2, wave 3. And, at that point, if I'm saying this is another wave 1 and another wave 2, I'm going to be very glad that I have these. I want to go over an ETF or a stock, actually, that really kind of makes me think, and it's not just, as someone said Tesla's a unicorn. Okay, Tesla is a unicorn. That's kind of one of the reasons I like it. I own a lot of Tesla, but realistically, Tesla can, and Tesla can lead a lot of sectors too. It can lead tech, and usually when Tesla and Apple are leading, that's honestly my favorite market to be in. So we'll see. Looking at Tesla, little dirty right now on the weekly. That's because I actually like how the daily's firming up. 1, 2, 3, 4, 5 waves up, and then that big old correction, I know it's hard to see, is between the 61.8 to 78.6% retracement. Now it's from this low that's pretty interesting. I'm gonna have to sacrifice some of these fibs. Oh man, okay. These are gonna go. I'll move these over here. 278.98. All right. So I'm gonna try to, subdivide this a little bit. I think this is a big ABC correction that ended. I think this is another wave 1 and another wave 2. Now, I did perfectly predict the length of wave 1, place of the wave 2 low was going to be hit, just like I've done about, 4 or 5 times. This might be the 5th or 6th time. Anyway, the length of wave 1, place of the wave 2 low was hit. So now there's a question, what's going on here? What's the bear argument? Well, the bear argument is that from this low, this is not a 1-2-1-2 Elliott wave nest. It's an A, B, C correction. So I think it's pretty important to remember bears are making that argument right now that Tesla is not going to go break above 299.29. Okay, that means if Tesla doesn't go above that level, they're saying this is an ABC correction and they're looking for a big spill. Here's the problem. I think Tesla is going to go above 299.29. And when it does, I don't think they're going to say anything. Anyway, I think this is another wave 1 and another wave 2. So the most important invalidation is 212.36. A little far, from the current price. If that level holds, the length of wave 1 places the wave 2 low is going to be a wave 3 target. Now, what's the other bull argument? A lot of Elliott wave theorists might be thinking I've jumped to a conclusion, right? Why am I already calling this a nest? If it could just be 1, 2, 3, wave 4. So let's actually talk about that possibility right now. What if this is not a 1-2-1-2 Elliott wave nest? It's 1, 2, 3, 4. And then when Tesla goes and makes a new high, it's not wave 3 of wave 3, it's wave 5. And there's going to be a correction. So what the bear argument would say, this is 1, 2, 3, 4. If Tesla goes up here, that's going to end 5 waves. So I should be looking for 5 waves to end, essentially, right? This is what the bears are going to say. If Tesla does make a new high, that this is 1, 2, 3, 4, 5 waves. So I'm looking for a correction, or they should be looking for a correction. Anyway, if Tesla is within 1, 2, 3, 4, 5 waves up, then the wave 5 target would be found by taking the length of wave 1 and placing it at the wave 4 low. That would give Tesla a target of about 330. Now, here's the thing. If Tesla was going up towards 330, I'd be looking at this weekly RSI, and I'm kind of jumping the route, to put it in football terms. Let me do a battery check. Yeah, I'm jumping the route a little bit. To put it in football terms, I think that if Tesla goes and makes a new high above 299 and is in the low 300s, that this weekly RSI is going to go break above 62.02. It's going to go 1, 2, 1, 2. And while everyone's calling this 1, 2, 3, 4, 5 waves up and looking for the big correction, I think it's 1, 2, 1, 2. Tesla's going to very quietly break 70.19 on the RSI and go wave 3 of wave 3. At that point, the wave 3 target would be the length of wave 1, place of the wave 2 low, and this would actually be a minimum target, taking Tesla up towards 350. Wow. All right. A lot of, things going on there, which is why I just kind of wanted to focus on this even shorter term count, which is honestly the most useful. I got to get my fibs from Narnia that I put them way over there to be aesthetically pleasing. 278.98. There we go. 299.29. There we go. Okay, so we see him. No, too far. 278.98. So I want to get into this very short-term count of Tesla. We don't even need any, more besides this is an ABC correction. So if this is an ABC correction, then from this low, bulls, I actually think, I know sometimes it feels like a Rorschach test. I actually think, and the extra color doesn't mean anything. I don't want people to say, wave theorists get made fun of if they use too many colors. I didn't pick red for a reason in this particular instance. It was just the color I had. He's like that girl in middle school that just, he highlights different colors and thinks he's learning. I don't think anyone said that. I think I just roasted myself. Anyway, I've definitely heard that. I'm not going to make that one green. All right, so this is what could be going on within the short term. And there's a little more useful of a level for Tesla, and I actually do think that this is what's going on. I think this is 1, 2, 3, 4, 5 waves up for Tesla. Yes, I'm going to get a little... Oh, okay. That was actually supposed to be the same color as those. Anyway, I think this is an ABC correction that was at the 61.8 to 78.6% retracement. So I think this is wave 1. This is wave 2. And this is wave 3. This is what I'm looking for Tesla. The tight stop, which I'm not going to use. I own about 40% Tesla, 65% Tesla. So I actually bought, that combination, around this range, around this 150 level. So then Tesla's had this big rally, bloated all the call premiums, and I've just been collecting, all this premium from YieldMax past 4 or 5 months. As this guy said, funneling it or pyramiding it into safer dividends, right? Anyway, 1, 2, 225.83, little wide, but that 78.6% retracement is a nice short-term level. It's not too far from 234. So I actually do think we're going to see 1, 2, wave 3. Minimum target for wave 3 is 301. 319 would be the 161.8% extension. And then, if wave 4 retests the wave 1 high, wave 5 is the length of wave 1 placed at the wave 4 low. Even within this cycle, I think there's a path that takes, Tesla up to the 330s, the 340s, the 350s even. And at that point, Tesla's weekly RSI is probably going to be above 70.19 and go 1, 2, 1, 2, wave 3 of wave 3. So I'm jumping the route. We'll see. Starbucks, not doing too much correlation analysis with these, but I think Starbucks is getting close to ending this correction that we've seen just from a fib standpoint. They are both in XOI. So this high is 115.48, 68.39. The 38. So for Starbs, that's what the cool kids call it. For Starbs, let me get my aesthetics ready. Okay, so for Starbs, I think this is 1, 2, 3, 4, 5 waves up, an ABC correction that ended between the 61.8 to 78.6% retracement of this advance. I was fortunate enough to buy Starbucks in that area, make a little bit of money on the way up, collect some dividends. Now I'm thinking about re-entering Starbucks. It's not the easiest count because this could be an example of what's called an expanded flat, where basically this is wave 1 and this is an A, B, C correction. I don't think it's, sometimes it's very necessary to distinguish between an expanded flat and a regular flat. For all, simplicity's sake, they both end at the same fibs. I'm sure some of the purists they both end, in my opinion, at the 61.8% retracement for wave 2, the 38.2% retracement for wave 4. If the beta is the exact same, as SPYs, right? Higher beta, a little deeper corrections. That wave 2 can go all the way down to the 78.6% retracement. Wave 4, the 50% and even the 61.8% retracement isn't, too uncommon. Anyway, very volatile stocks can also have very quick corrections. That's why I don't short corrective waves. I prepare for them with stuff like, see first part of the video. Anyway, I'm looking for 1, 2, 3, 4, 5 waves up from this low for Starbucks. This wave 5 ended with momentum divergence on the RSI. Now it's between the 50 to 61.8% retracement. 78.52 is the most useful invalidation. Useful, maybe not the best word because it's pretty far. 61.8, the 61.8% retracement of 86.40 is a little bit of the opposite problem. It's a little too close. But above those levels, I am looking for wave 1, wave 2, Starbucks to enter, wave 3, after taking a little bit of a break. Not doing, correlation, analysis. I think Nike is actually the next chart. I just covered all the XLY holdings on accident. But what I'm looking for Nike, getting a little close to making me look silly. Probably not the first time it's done that. But what I'm looking for Nike, very clean 1, 2, 3, 4, 5 waves impulse from this low. Got a very, uncanny one out of that. And then it went below this low. And now I think this is all a large wave 1. This ABC correction went all the way to the 78.6% retracement. So Nike's kind of in the, an interesting zone. 82.22 is going to be probably the most important level. That's easily the most important level. And I know a lot of, people don't like when it's just, this low holds, that high is going to go. In wave theory, that setup can often be the most meaningful and the most profitable because that is a real invalidation for wave 2. If 82.22 goes, this is not wave 1 and wave 2. Okay, it means that this large long-term wave 2 correction isn't done yet from a wave theory perspective. But if that low doesn't go of 82.22, it's a very useful invalidation for a stock that's got very, interesting fundamentals like the other stock I just went over. That's definitely not a monopoly. Like other XLY holdings like Amazon and Starbucks. They got, Nike. Maybe it's a little, if they're making Nike really difficult, I think we're going to see why. 82.22, useful invalidation for this to be wave 1, wave 2, wave 3 of wave 3. If that goes, I don't think it's the end of the world for Nike long term. It just means that this big blue wave 2 hasn't ended. And this could be, the minimum target. The length of wave 1 placed at the wave 2 low is 140 already, pretty substantial. CM, Canadian Imperial, those Canadians. I've been watching South Park. I think it's a sign. Ike's Canadian. It's a funny show. Man, we talk about Canadians so funny in America. I don't know. I've never seen one of y'all. Y'all are so close to us. I've never seen a Canadian. I swear. I watched the episode of South Park where they build a border wall at the north border. Canada builds a border. I think you guys did that. You guys basically did build a border wall because I've never seen a Canadian come down here ever in my life. I don't know why there would. All right, if I didn't get canceled, this is a large wave 1. 1, 2, 3, 4, 5 waves up for Canadian Imperial. 32 is a very useful level, the 78.6% retracement. And I'm looking for this ABC correction to end. So for the Elliott wave, I think the benefit of CM is that this is a really pretty 5 waves impulse. The wave 3 has a very clean, it's just so distinct. Wave 1, wave 2, wave 3, big old high within wave 3 on the RSI. A clear wave 4 correction, and then a wave 5 that ends with momentum divergence. So I think this is pretty clearly 5 waves. Now it's at the 61.8 to 78.6% retracement, where 3 waves back can end. I think that's, it's going to look something like this. The length of wave 1, placed at the wave 2 low, might be a little, far away to be thinking about now, but I'm eventually looking for from this box. I posted about Brookfield. That's a Canadian financial. I think I'm going to leave out Toronto Dominion in this book, but I'm looking for some of these Canadian financials to really turn the corner from the 61.8 to 78.6% retracement, head above 1. So congrats, Canada. I'm jealous of you guys. XPEV, China, why can't you be more like Canada and the stocks go up? Anyway, now, I get clown for China a lot. Clip has treated me very well. And Li Auto actually treated me surprisingly well for China. Now, so a little bit of trade history for me. Right around here, for a long time I held these. I took a position in Li Auto and XPEV, half and half. Li Auto worked out very well. Li Auto and XPEV both went up together, right? And then Li Auto stayed up and XPEV did this. So correlation analysis didn't work in that scenario. But I do think, and I'm still holding XPEV, I'm bag holding, since that's everyone's favorite fetish, how much someone's bag holding, some stranger. I am bag holding XPEV. I took a half position size, smaller position, to account for XPEV's high beta. And so I'm holding it from about 29. It's at about 18 right now. And I'll let y'all know, I'm bullish. Surprise, surprise, but I'll talk about why. I'm still holding it, and I actually think it's going to go pretty well. Now, the most important thing I got going on in China is a lot of, about 60%, 70, 65% clip. KLIP, selling covered calls, juicy covered call premiums on KWeb, Chinese Internet ETF, same fund manager as Clip. So they actually gave me that idea to pair these together. I was already trying to replicate the results of QILG, which covers half the position and catches the other half of the position. I went on a love affair about why I love QILG on my last video. I'll get a room this time. But anyway, there's a few ways to view XPEV. I'm sure seeing the nest view first on this page isn't, surprising anyone. But I think this is a 1-2. What this could be is a wave 3 and a wave 4. So if that's the case, XPEV is just going to make a marginal new high above 23.62. Would that be a big deal? I think that would be a big deal, because that would be 1, 2, 3, 4, 5 waves up. Even if XPEV corrected, it's done a lot to show it's formed an impulse from that low, per Ralph Nelson Elliott. Okay. What I actually think is going on, what I'm a little more interested in with XPEV, is I think that this is wave 1 and wave 2. And I think this is another, I don't think it's a wave 3, although it certainly could be. I don't think it's a wave 3 and a shallow wave 4. I think it's a wave 1 and another wave 2. Part of the reason I think that, I'm not going to do too much correlation analysis. I posted about QFIN and Chinese Internet recently. QFIN and XPEV are not reliably correlated at all. Okay, but, I'm looking at other parts of Chinese Internet. Pinduo, NetEase, I'll get into. Obviously, I'm bullish Alibaba. And Neo, I don't think that we're going to see a wimpy wave 5 if XPEV makes a new high. I think it's going to be a little more explosive than that. Part of the reason, if you can believe I'm going to get this crazy, is within the cycle from the August 18th, 2023 low. Very short-term count, shorter term counts, they get invalidated quicker. They win quicker too. I think that this is a short term count of XPEV where, this is almost getting to the point where it's one of the first, charts I check in the morning. Hey, is it XPEV day? I'll tell you why I'm looking for XPEV day, which I'm going to get my ass trolled off if I, the sexy ones, man. They always remember the sexy ones, man. That's because they don't look at the boring, important ones. They don't look at the boring, important ones, but they remember the sexy ones. I get it. I remember the sexy ones too. Bitcoin, anyway. Not gonna do that because it's really just kind of an egoic thing to get into. Do you even trade? well, if you do trade, you shouldn't do it all the time. It's like, all right. That's pride. Have you ever seen Pulp Fiction? That's pride. That's pride effing with you. You don't even trade, bro. You don't even trade. You're gambling. Actually, I don't even think you should trade. You shouldn't trade from 9 to 5. Just do something passive. All right, man. You need to take your meds. You're switching up like your favorite guru, Tiger. Tiger, who definitely does this. He's definitely real prepared for, he's got all types of stuff like this. You ask Tiger and Lizzie and Marty Boy, I'm sure they got all types, who's that other guy now? Game of Thrones? Yeah, ask Game of Thrones if he's got this. Game of Thrones told me the market's going to crash. Ask him if he thinks my position's going to hit. Seriously, yeah, no, for real. Go ask Game of Thrones if you think my position's going to hit. Ask him what his short position is. Say, hey, Game of Thrones, you're getting all this money, telling people the market's going to crash and all this stuff. Where's your position? Do you even really trade Game of Thrones? I don't think Game of Thrones trades. But if he does, please ask him how you think this position's going to do in his market crash scenario. Game of Thrones, man. If someone watches this video and they're not on FinSwit, they're going to think I'm skits. They probably already think I'm skits. You ain't seen crazy yet. I'll show you crazy. You'll see crazy. I think this is 1, 2, 3, 4, 5 waves up for XPEV. And even just looking down at this RSI, 1, 2, 3, highest high reading, shallow wave 4, wave 5 that ends with momentum divergence, 15.44, nice level to be above, 14.21, wide invalidation. We'll see if XPEV, Neo, if they hit, or if, just to be fair to the Bears, I'm wrong about them. Long history with Neo. Someone asked a really funny question. They asked if it's my most recent reply. They asked if they thought if FinSwit thought the advance from the 2023 low was over, and we were crashing, if the correction was ending and it was going to continue, or if the advance from the 2023 low, the October low, never happened. And he actually had it was an option that the advance from the October 2022 low never happened. And at first I thought, like, wow, that's a really kind of stupid question, that the advance never happened. But I was like, oh, he's asking FinSwit. Yeah, in the mind of FinSwit, these advances never happen. Oh, yeah, no, that's this Bitcoin advance, this Tesla advance, all these advances never happened. That actually is how, people think. So that's what I, answered. I said, no, I don't think, most of the people on FinSwit act like that advance from that low never happened. There's no short borrowing fees. Everyone's talking about interest rates. Hey, if everyone's talking about interest rates, why aren't they talking about short borrowing fees? Did your borrowing costs get cheaper? All you talk about for the past how long? 18 months is how interest rates are rising. Borrowing costs are expensive. The only borrowing cost you don't talk about is your short borrowing fees. That's kind of interesting. Especially on all these growth stocks that you're all shorting. E-Trade's cutting y'all a deal. I heard one guy say that on margin. He's like, I called E-Trade. E-Trade gave me a deal. Get the heck out of here. Do you think I am... E-Trade cut you a deal, fam? Shit, man. E-Trade cut me a deal. That's a new one. You're going to need... Man. I think this is 1, 2, 3, 4, 5 waves up. All these guys talking about their margin accounts, really? So you're getting a 12% dividend. You're paying a 6.5% margin fee. So you're getting a 6% yield. There's an ETF that pays a 6% yield owning cash right now called CSHI. And there's an ETF that pays a 9.8% yield holding only short-term treasury bills called HIGH, high. So if you're paying 6% margin fees, 7% margin fees, borrowing fees, 5.5% to get a 12% dividend yield, you're really just getting a 6% dividend yield, which you could just get with cash. Anyway, that was... Did I say that out loud? Anyway, this is a large wave 1 and a wave 2. I think for NEO, beautiful invalidation, 7. If NEO goes below 7, this is not 5 waves up from this low. I think NEO and I think XPEV are going to hold these levels and enter wave 3 of wave 3 together. NetEase I wanted to show. It's not all doom and gloom in China. I know Alibaba, would make it seem like that. NetEase has recovered a little bit. I think from this low, NetEase has formed a wave 1 and a wave 2. So it's a wide invalidation. But I think we're getting a little bit of leadership from NetEase in Chinese internet. I'm not going to do Pinduo in this video to save time. I think Pinduo giving it a little bit of leadership here. Make sure I didn't just put random numbers there. Yeah, that's what I wanted. 1, 2, 3, 4, 5 waves for wave 1, wave 2. So I'm looking for 80.79 to not get broken. And we're going to see NetEase resume this wave 3 of wave 3 rally. Hopefully with Alibaba and more of KWeb this time. Lam Research, man. I know a lot of people really interested in Lam Research, LRCX. I wish this company would do a stock split, but really, it's one of the prettier semis. It's very correlated to SOXX, so I kind of wanted to, it's one of the, not the more popular ones, but it's a big performer, and it's a big, gauge for semis. Moves very in line with SOXX from, what I've seen. What I'm looking for Lam Research in the big picture is that this is 1, 2, 3, 4, 5 waves up from this low. Very clean subdivision. 1, 2, wave 3, highest high. Shallow wave 4, wave 5 ends with Momo. You can even see the subdivision on the RSI. 1, 2, 3, 4, 5. And I think this is a wave 2 correction. From this low, the most important cycle, I think, is that this is wave 1 and wave 2. I think this is wave 3. I think this is wave 3. And so I'm looking for wave 4 to end. I've got the fibs out for the levels to the downside. I like to, count some of them out live just so you guys can see how I do it. I'm not sure if it's good for continuity. Anyway, what I'm looking for LRCX, this is wave 1 and wave 2. Big wave 3 makes the highest high on the RSI. I think this is an ABC correction from this high, ending wave 4. So if I take the 100% extension to the 161.8% extension, there's a little bit of a zone where bulls are going to look for 572.54 to not get broken. That's a shallow wave 4 and a wave 5 that I'm expecting to be entered for LRCX. Something to look at for NVIDIA and AMD bulls, I am sure. Novavax, I actually got a question from a friend about this one. I've posted about it before, and this is actually kind of what made me think about, this chart. It was trending for a little bit, And I did talk to, one of my friends about it. He asked me what I thought. So it's a speculative biotech. I'm not sure if my buddy's going to buy it, but I did have my own opinions about Novavax before he sent me that text, and I thought I would share them. So in the big picture, I think correlation analysis with Novavax, Pfizer, Moderna, and BioNTech is not the best idea, and it's not the best idea for this video. But that whole sector has gotten torched, and I think that whole sector is going to recover in the big picture, which, to be fair to critics, I've thought for, a bit. Anyway, I think this is, and also to be fair to critics, caught all this. Anyway, with Moderna and Pfizer. Especially with Pfizer. Made a lot of money with Pfizer. Anyway, 1, 2, 3, 4, 5 waves up. Pfizer was the best financial thing that ever happened to me. Pfizer, 1, 2, Novavax, which is not Pfizer. 1, 2, 3, 4, 5 waves up. I know this is a really small wave 1 and wave 2, but that's just because of, Anyway, that's just because of how big that rally was in comparison. I think that was pretty clearly 1, 2, wave 3 of wave 3 entered. 1, 2, wave 3 of wave 3. Shallow wave 4, wave 5 correction. That's all a large wave 1. I think this is an A, B, C correction wave 2. So the most important invalidation is 5.61. And the reason I posted about Novavax honestly and talking about it is because that's a very useful invalidation. If 5.61 goes, Novavax did not form an impulse from this low. Is there evidence that Novavax formed an impulse from this low? I'll be honest, it's not the cleanest I've seen. I was a little interested, though, in the impulse that Novavax may have formed from this low. Because from this low, and this is, yes, a intraday 60-minute candle chart, to be fair. I do not ever really count these, but I was a little interested. Did Novavax form an impulse from this low? It's very close to invalidating that it didn't, which would be below 6.56. Which I'll call a tight invalidation. I just said the wide, more meaningful invalidation. But I think looking at this and doing 1 month, 60-minute counts, that's kind of like doing, I'm going to be honest, it's kind of like having a needle in your arm. From the wave theory perspective, it's kind of like being, at a bus stop turning tricks. But anyway, I do think this is 1, 2, 3, 4, 5 waves up. We make a new high with momentum divergence on the RSI. It's a 1 month chart. Someone calls me a crackhead. I don't blame them. Above 6.56 or below 6.56. I'm a crackhead for sure. The bigger invalidation is 5.61. And Novavax can do something crazy. Riot blockchain. I posted about Bitcoin recently. Bitcoin is the most important gauge that I'm using for crypto, and I posted about Ethereum too. I wanted to focus on Riot just because I talked about it before it broke an invalidation. But what I think the most important gauge for Bitcoin that I'm using is BITO. I think this is 1, 2, 3, 4, 5 waves up, wave 1 and wave 2. I think this is another wave 1 and ABC correction, wave 2 at the 100% extension. So I'm looking for, I'm really looking for 12.06 to not get broken. Bitcoin enters wave 3 of wave 3. Will Riot rally with it? The correlation isn't perfect. I think if this really is the big one for Bitcoin, it would end up being the big one for Riot. Anyway, this is what I had. I wanted to show it because it's wrong. It didn't happen. We broke below 9.42. Now, is that the end of the world? Before it broke 9.42, I said I made sure to say it's not the end of the world. That was just a risk reward opportunity that I saw when it was pretty close to it. And I still think that that's just the stop rate, to be honest. So Riot, the bull argument is that it very clearly, I know wave theory to a point can be a Rorschach test, but most wave theorists can be pretty subjective about, did a 5 waves impulse form? Is this a 3-3-3? 3 waves up, 3 waves back, 3 waves up, so it's just a correction? Or is it 5 waves up, 3 waves back, so there's going to be another 5 waves up, it's an impulse, right? The type of debates wave theorists have, that's why people think we're a little nuts. It doesn't make sense when we're just talking about letters and numbers and stuff. Anyway, interesting chart for Riot. I think Bitcoin and BITO and Ethereum, they got cleaner levels. They never make a stock like Riot or Mara easy. I'm looking for, as someone who's long Coinbase and Coney, as someone who's long BITO, as someone who bought Litecoin, a small position at 227 and is holding the bag. I'm looking for, and I'm holding a winning bag on Bitcoin for those playing the Guru Furu game. I think this is 1, 2, 3, 4, 5 waves up for Riot. Large wave 1, an ABC correction at the 61.8 to 78.6% retracement. Above 7.05, that's the 78.6% fib. Let's see. And we're right between the 100 to 161.8% extension. Now, Riot's so volatile, it could go below that. It wouldn't mean much. I think 7.05 is a very useful level. I posted about next era energy recently, but just really quick, this is probably going to be a super important chart, not just for the utility sector. I've been buying an ETF called UTG. The guy at the very beginning of the video talked about safer dividends. Even the safer dividends right now, there's a little bit of volatility to them. UTG is a closed-end fund that holds utilities. I've talked about how I own In-Phase Energy. I think that's going to be highly correlated with this clean energy giant too. How next era energy resolves this count above 43.70 is going to be very important. If it is above 43.70, this is a crazy time to be alive for next era energy. Below this level, it could be invalidating this view. I think that looking at the chart, this is 1, 2, 3, 4, 5 waves up. 1, 2, wave 3 makes the highest high on the RSI. Shallow wave 4, wave 5 correction ends with momentum divergence. Now we're at the 78.6% retracement. We're at the 161.8% extension of the length of wave A, placed at the wave B high, being where wave C can end. So they're gonna make next era energy difficult. I'm looking for 43.70 to not get broken and a wave 3 of wave 3 to be entered.